Certificate in Islamic, Green, and Sustainable Finance. Module 4 Islamic Finance, Values embedded in Green Finance Values. Intended Learning Objectives. The learner would be able to understand the Islamic prohibitions and philosophical values that make them congruent with sustainable and green finance. Values. Basis of Islamic Sharia principles in green Islamic finance. Quranic and Hadith related values drive the Islamic investment and financing niche. A majority of the people mistake that Islamic investing relates to the fact that interest, riba, is not given or taken, and some people frequently believe in the fallacious notion that Islamic financial contracts are a disguise for charging interest using a different name, like rent or profit. In reality, Islamic investing is driven by several basic tenets and economic philosophies. This Islamic Sharia compliance aspect is supervised by scholars conversant with Islamic commercial jurisprudence, fiqh as Sharia boards or committees. Sharia principles. According to numerous regular finance experts and investors, Islamic Sharia compliant financing and investing is tantamount to applying the restraining elucidations of the Quran. Once this is focused on the investing and financial sector, Islamic Sharia compliance results in the way of arranging finance-related dealings in a way to show that cash has no inherent value, and the dealings promote a huge communal good through linking returns with risk sharing. Therefore, these are not constraining rules, but a social charter that is different from traditionally designed financial services. The fundamental doctrines of Sharia values are stated below. Interest, riba. Interest is forbidden. Interest is referred to an increase in the principal sum without any sharing of risks of the venture or transaction, and the increase in the principal sum by the mere passage of time, i.e., the time value of money concept does not hold in Islamic finance. Interest is forbidden on both sides of the deal, i.e., paying and receiving. Game of chance, uncertainty and pure speculation. Maza and Garar is prescribed. Activities which are included are gambling, pure speculation, hedging as a profit center, or any transaction or agreement which includes an element of chance or excessive uncertainty. Forbidden, haram. Business activities or industrial activities. Some of these are specifically prohibited in the Quran, and other based on hadiths, on causing harm. Illustrations include businesses that earn a substantial amount of income, higher than 5%, from the sale or distribution of intoxicants, tobacco, pork, weapons manufacturing, gambling, pornography, and financial firms that earn interest or give interest. Accounting and Auditing Organization of Islamic Financial Institutions, OFI, Guiding Principles to Screen Financing and Investment Opportunities state that if the balance sheet and profit and loss account of a company have the following characteristics, then these should not be invested in. 1. Businesses with leverage, debt to equity, greater than 30%. 2. Companies with debtors, receivables, ratio to total assets are more than 45%, or 3. Businesses, with income derived from interest are higher than 5%, or interest expense, is more than 5% of expenses. Risk should be borne by both parties, investee, and investors. Investors are those parties who provide the funding. They are not creditors in their traditional sense, that are certain or expect a certain rate of return. This is measured by profit share, fees, or any other form of compensation. The investee is a manager of a venture, who share the risk of the project, transaction or deal with the investors. Those risks are pooled by mutual sharing of consequences of a negative event, and the distribution of profits or losses, to both the parties. Cash has no intrinsic worth. Cash, on its own, has no intrinsic value, hence it is not a commodity of worth, to be bought or sold. Cash growth, or declines in worth only occurs when used with other assets for constructive activity and, as a measure of value and medium of exchange. Cash has no intrinsic worth and contractual terms should be clear. Cash, unless fused, together with other assets, cannot grow in value. Over time, growth in value cannot be derived, simply due to the passage time, based on amount. All transactions should be based on active, economically productive work. Investments must be made in physical, tangible assets that generate income, directly or indirectly, and real physical or tangible assets must also back transactions related to securitization. Contractual terms should be clear. Terms and conditions of contracts should be clear relating to terms of contributions, of capital, and efforts, including expectations of all parties concerning sharing both the profit and loss. All parties must have an awareness of the tangible products or services being transacted as they are agents for each other and the transactional values. Agreements must be mutually agreed to by all parties and should be for a defined period of time or stated at the onset that they are perpetual, with clearly defined mechanisms for future changes. Zakat, obligatory charitable giving. A Quranic principle that is unique in Islamic financing and investing is the principle of zakat or mandatory giving, usually based on 2.5% of wealth, above a certain level, to the 8 specified categories of persons in the Quran, plus to those to whom it should not be given, like one's own family and descendants of the Prophet Muhammad, pbuh. This is meant to be an active response to helping those in need. Islamic investment managers sometimes provide mechanisms for payment of zakat on the investment income for their clients who adhere to the Islamic faith. Hence, a zakat fund account is maintained by many Islamic financial institutions, detailing the collection and distribution of the zakat collected.
Sadaqah and cleansing. The cleansing doctrine necessitates that any investment return that may be unclean, based on Islamic commercial jurisprudence rules, should be given to charity if it may have been generated from activities defined as unlawful according to. This rule covers all types of investors and investments. As we cannot at all times be sure of the source of the incomes of clients and or investee units, Islamic financial institutions should, according to their own judgment, give a fixed percentage, say 5% to 10%, of their income as a voluntary charitable contribution in form of institutional sadaqah through their sadaqah account. Furthermore, when a party transacting with an Islamic financial institution, defaulting on its obligations, and a contractual penalty is payable, this will also go to the sadaqah account. Sadaqah and cleansing, continued. Azad Funds, based in the U.S., even has a cleansing calculator on its website for real-time calculation of the calculated amount for cleansing and to provide guidance for sadaqah payment, a voluntary contribution to charity. It should be understood that the sadaqah may not always make the unclean income clean, but it will increase the reward, thawab, so as to make the wrongdoing comparatively negligible. The Sadaka funds can be used in any charitable activity and have fewer restrictions as to the parties to whom this can be distributed, therefore social impact investments may be funded therefrom, like building schools, medical center, etc.